Can we come to order? This afternoon we have two sessions. The first on the study on the Canadian real estate market and home ownership, in the first hour we have the President and Chief Executive Officer of the Canada Mortgage and Housing Corporation, Mr. Siddall. With him is the two senior vice presidents, Mr. Tremblay and Mr. Manel. And I believe, Mr. Siddall, you have a brief opening statement, and we'll go from there.
Merci, Monsieur le Président. Je suis heureux d'être ici.
Thank you, Mr. Chair. It's a pleasure to be here. I want to thank the committee for rescheduling my appearance after I wasn't able to attend the session on January 30th. Unfortunately, my daughter was suddenly very ill, and I had to come to her help. Michel Tremblay, Senior Vice President of Policy, Research and Public Affairs, spoke on my behalf at that time, and he joins me again today to my left. Also with us is Steve Mennell, Senior Vice President of Insurance. Rather than repeating what Mr. Tremblay said 2 weeks ago, I'd like to briefly respond to some of the testimony you received from other witnesses. First, I should clarify CMHC's role in the housing finance sector vis-a-vis other federal departments and agencies, and in particular the Department of Finance.
Does not, in fact, set the rules for mortgage loan insurance. This is the purview of the Minister of Finance. As the Government of Canada's advisor on housing policy, however, we do advise the Minister on potential changes and their implications for financial stability and Canadian housing markets. Now, more often than not, our advice and analysis is provided confidentially. Given that housing finance policy decisions can affect the marketplace, this function is managed separately from our commercial functions, and broad consultations on these changes are not always appropriate. We also support the Deputy Minister of Finance's Senior Advisory Committee with regard to housing issues. This committee is a discussion forum for financial sector policy issues, including financial stability and systemic vulnerabilities. So let me turn now to just a few issues that have been raised directly with the committee by prior testimony. Some witnesses have expressed concern about the changes in mortgage loan insurance rules announced by Minister Morneau on October 3rd. And I can confirm that we did, in fact, provide policy advice to the Minister and Department of Finance officials on these changes, and that we fully support them as they contribute to the sustainability of Canadian economic growth. The committee has also heard that the October 3rd changes had a negative impact on first-time home buyers and on some industry participants who experienced some disruption in their business models. There's been some suggestion that the changes had unintended consequences. However, as I noted in a commentary piece published in the Globe and Mail on October 17th, in fact, the results of these policy changes were fully intended. We did expect lower levels of competition in certain areas, as well as a modest increase in mortgage rates, and we did understand how the changes would impact first-time homebuyers' ability to borrow. With regard to competition, we need to make sure that measures to support competition promote financial stability. Good public policy involves making balanced and measured trade-offs between differing objectives. And in our judgment, the mortgage insurance regime was providing undesirable stimulus in the marketplace, so indeed we sought to remove distortion, not to add distortion. Action, we felt, was also needed to address the level of household indebtedness in Canada, which is now at a historic high of 167% of disposable income. The Bank of Canada calls this factor the greatest vulnerability to our economic outlook. Les emprunteurs fortement endettés sont plus susceptibles d'être.
Highly indebted borrowers are more likely to be younger first-time homebuyers. With potentially less employment experience due to their age, they would also be at higher risk of losing their jobs in the event of a downturn. In short, they are a vulnerable group of Canadians who would suffer financial hardship should the economy take a turn for the worse, or should interest rates rise significantly.
Financial acceleration Should a weakening of the economy come to pass, their financial troubles could have spillover effects for the economy at large. It's important to note that the October 3rd changes were not targeted at escalating house prices in the Greater Toronto and Vancouver markets, as suggested by some witnesses. In fact, our objective was to avoid negative long-term consequences to the Canadian economy as a whole. At CMHC, we ourselves have signaled strong evidence of problematic conditions in the Canadian housing markets as a whole for several months now. And it's true that Toronto and Vancouver have higher levels of indebtedness and thus will be more affected by the changes. But as the Bank of Canada noted in its December Financial System Review, the proportion of highly indebted households has continued to rise in many cities, and that this is a problem across the country. The stress test imposed on borrowers ensures that they could withstand an increase in interest rates. This will impact only borrowers who are or would be highly indebted following the purchase of their house, regardless of where they live. So the resulting delay in when some individuals can purchase their first home, or the decision to buy a smaller home, to rent or stay put, is a necessary trade-off to ensure economic growth and continued financial stability for all Canadians. As it is, through nearly $1 trillion in mortgage insurance guarantees, the Home Buyers Plan, and other federal and provincial programs, we believe substantial support already exists for first-time home buyers. It is possible to have too much of a good thing. I can assure the committee that CMHC continues to closely monitor housing markets across the country, and we continue to offer the government expert advice based on our research and analysis, both to facilitate access to housing and contribute to financial stability. Merci encore de m'avoir donné la...
Thank you again for the opportunity to speak to you. My colleagues and I would be pleased to answer any questions you may have.
Thank you very much, Mr. Siddell, for what is a direct and to the point brief submission. We'll turn to the first round, and I think we can get everybody in if we go with the first three questioners, one from each party at 7 minutes and the rest 5. Robert.
Thank you very much, Mr. Chair, and thank you very much, Mr. Siddell, for coming here today. I had the opportunity of walking for about 900 kilometers, visiting 41 First Nation communities over the past 22 days. And in many of the communities, I was very pleased to see that CMHC is actually building homes in partnership with many of these communities, and some of these communities have excellent housing. But, you know, I met young men such as a guy named Moose, who was very proud of building new homes in his community, and, you know, I'm very proud of the commitment our government made on that. But also found a lot of challenges that are occurring, and, for instance, related, to rent within communities. And I can't say yet that there's a correlation. I'm going to have to go over my data and what I learned, but it seems that some communities require that rent be paid by people who are living in CMHC housing, and other communities do not. And it seems at first glance that there will seem to be a correlation between the long-term quality of that housing. I guess, you know, we can talk a bit about that, but also what is the CMH actually doing in working with First Nation communities in this file to just get more information? Yeah,
thank you for the question. We share responsibility for housing on reserve with our colleagues at INAC. We spend about $282 million, I'm just referring to my notes, currently to house First Nations on reserve annually. And Budget 2016 added an additional $554 million over 2 years, of which $138 million was directed to CMHC for renovation and retrofit programs. That was the bringing back of a program that was introduced some years ago. So that's the purview of our activity. It tends to be more market-oriented, CMHC's participation, than INAC, which tends to be more deep support. But we share that responsibility with them. I have visited a number of First Nations communities, not 41. Every time I travel, I try to do it because it's a core part of our responsibility. And people were surprised when I referred to the status of housing publicly as abysmal on reserve. That shouldn't be a controversial statement for a civil servant to make. And so we definitely share your concern. Part of the problem, of course, is a local political problem. There is a correlation between those communities that collect rent and enforce rent and will actually evict people, and I should say support people so that they can pay their rent, and the housing outcomes we reserve in those communities where versus others where that is not as enforced and it's more of a there's less political courage, I would say, with respect to rent collection.
I was also wondering about capacity, because a lot of these are very small communities, some 500, 1,000 people, and I found sometimes that the individuals, they would have up to, in a 3-year period, up to 5 housing directors moving in and out according, to the circumstances of life and employment. But obviously that has an impact on capacity. And I guess my question is, what are you doing to work with those communities to build that capacity so they can actually fill out the proper forms in order to obtain the housing that they can't or have a right to? Because I found some communities were very successful in obtaining housing, and others it had been a few years since they had been able to obtain because they were missing deadlines, someone was missing in action somewhere, and I was just wondering what you're doing.
Thank you for the question. Capacity building is an important part of our mandate, and we reserve monies each year to invest in that. If you take communities of 50 or 200 or even 1,000 people, put them in remote locations where there isn't much economic activity, the capacity will be a problem. And that's the situation that faces many First Nations communities, as members will know. We deliver housing through us and INAC through different programs. It's very confusing, and with the amount of turnover in those jobs, frankly, we haven't made it easier. And so we're working with INAC, Indigenous Northern Affairs Canada, to try and work in a more client service-oriented way so that we can help these individuals. In addition, our own consultants at CMHC spend a great deal of time in assisting in developing capacity, in promoting educational training, rent collection programs for housing managers on reserve as well.
Do you think there would be an impact if, instead of having one small community trying to be everything to everyone, that in fact they shared the capacity among many different First Nations? So one community seemed to be really good at housing, another was really good at education. I know you can't comment on the education side, and some seemed to be excellent at water management and water sustainability, and others in environment and economic development. But perhaps that one community who's excellent in housing is there a way of ensuring that they can share their capacity with other First Nations so that we see not just one moving ahead so far and then everyone seeming to stay behind or falling behind in the quality of their housing, which leads to health outcomes and all sorts of other issues that we know that occur? But is there a way that we could manage that or create a different way of thinking about a system?
Yeah, I won't talk about education other than to say we know that better housing is positively correlated with better education and health outcomes for children and people. So there is a correlation, and we take that responsibility on. In fact, a collection of expertise in a regional housing authority or a community housing authority among neighboring First Nations is a way to deal with that. It requires collaboration and cooperation among people sometimes who want to have their own responsibility. And we've talked to First Nations communities about doing exactly that. I think it would be a wise development.
But that's something very hard to do, because often people we become very protective of what we know and what we have. We want those jobs in our own community, and if someone is doing it in another community, even though they might be very good at it, I think politically we become very fearful.
Although a whole of government approach where we helped sponsor that expertise and shared expertise in communities wouldn't have to be a zero-sum game, would it? You could have people from one community performing one function, people from another community performing a different function for the group. That's, I guess, a possibility.
I like that zero-sum game. And then one final thing, just moving on to, for instance, what's the involvement with the CMHC in Housing First strategies in homelessness?
Housing First is the responsibility of our colleagues at I think it's Employment and Skills Development, or now it's Employment and Social Development Canada, ESDC. Also under the purview of Minister Duclos, but the Homelessness Partnering Strategy and Housing First. Homelessness per se, we coordinate with them, but it's ESDC's responsibility.
Okay.
Robert, we'll have to end it there. That's
Okay.
it. I'm sorry. Mr. Albas.
Thank you, Mr. Chair. Thank you to our guests for being here today. Certainly appreciate you coming and giving the committee a little bit of a better understanding of your opinion. Now, some of the best advice I ever received was to think of people, not for them. And when I read this, sir, it sounds like your agency is thinking for people. Action was needed to address the level of household indebtedness in Canada, which is now a historic high of 167%. Now, that may be, that is probably true, but it doesn't necessarily address housing debt. We've had witnesses after witness come and say that when someone can get into the market, and I'll just bear in mind that many people, the baby boom generation, came in at double-digit interest rates, and they did so because they felt, A, a home gives them a place for their family, for safety. Second, it allows them to put away money into a forced savings, so to speak, and allows them to have the privilege of home ownership, which I think is important. And I think what you're doing here with your comments, sir, is you're somewhat construing the situation to sound like it is all mortgage debt that is causing the problem, when we've heard very clearly that access to credit card debt, access to financing loans for for cars or for other non-durable goods, unlike a home, I think is an issue. So when you say highly indebted borrowers are likely to be younger first-time home buyers, are you not also saying that when people finally get into market, they're going to be older and they're going to be kept out of the market for longer? I'm just trying to get a sense of where you're going with this.
So in Canada, we have among the highest home ownership rates in the world at about 69%. And indeed, as you suggest, home ownership is well correlated with various social outcomes, including forced savings, retirement wealth, etc. We took as quite instructive the research being done by the Bank of Canada that the number of people who had very high credit scores that were entering the housing market had grown from 4% of people who were indebted to 8%. First-time homebuyers in particular tend to be substantially, I think it's 90% plus mortgage debt as opposed to other sources of debt because they're quite stressed. And so we were concerned about their ability to afford their homes. And I don't think we were thinking for them with respect. I think we were very much thinking of them.
I would disagree simply because when someone is young and most of the time they have some education debt that they have to pay off for school, but then they usually, when they're buying a home, it's usually because they're on a path, they may get a promotion, etc. And also, I will say, like the baby boom generation, they got into the market knowing what the risks were and made sure that they could make those payments even when they were dealing with double-digit interest rate. I think, again, the policy somewhat smacks of the nanny state. Now, what evidence does CMHC have that supports your contention that portfolio insurance has distortionary effects which are stimulating excess credit and contributing to higher levels of household debt?
There were a number of business models that were substantially based on, for example, refinancing, and I gather some testimony has referred to refinancing as something that has been lost. I just want to distinguish between renewal and refinancing. So if an individual comes to the end of their mortgage term and seeks to renew, they can still do that. That's freely within the programs that we have in homeowner transactional and portfolio insurance. Refinancing is where somebody goes to a bank and wants to borrow money and increase their amount of indebtedness out of their home. And our contention is that's not a housing need, which we think CMHC exists to provide. That is a housing want, and that can be provided and still is freely available in the public markets. But to the extent there's government support for it, that didn't strike us as something that the government should be supporting.
Oftentimes when someone's need to renew, they're at the end of 5 years and they often have the equity already to be able to pass because they've hit that 5-year period. But again, part of refinancing allows for people to be able to invest in their small business. It allows them in some cases to survive a lockout or a strike. It sometimes will allow them to be able to purchase a home from a spouse because of a divorce. So I just think it's a little bit short-sighted for us to look at those. And what evidence of risk was present to eliminate portfolio insurance on refinance and rentals when there was a delinquency factor of 0.24 of 8% in the current portfolio?
So the evidence is in economic crises throughout history. Of the 46 financial crises for which we have data, the overwhelming majority of those, 70%, were preceded by housing boom and bust cycles. There's a book called House of Debt by Atif Mian and Amir Sufi, and they say it is as close to as definitive a relationship as exists in macroeconomics. We were jeopardizing the economic future of Canada by promoting an economic cycle in housing markets that could result in a crash and that could result in unemployment for people.
So you're quoting from a Brooks model, an economic model, as your evidence.
You
for what
asked
could
me for
happen.
evidence, sir.
Well, sir. We just had the financial crisis of 2007, 2008, in the post-recession. We have Alberta, for example. Alberta has been weathering a significant economic downturn, and that is without a housing collapse. So what do you say when you're faced with the actual practical situation that we just had a major stress test in 2007, 2008, and we have continued to see a weathering where Albertans are doing what it takes to be able to keep their homes?
We don't believe we've been tested in our system in Canada. I wouldn't suggest that the financial crisis as applied in Canada was a true stress test. We publish stress tests that are far more aggressive than that, and with respect to oil price declines, far uglier than we've experienced recently in Alberta. I would suggest that a single-digit decline in house prices is not a crisis.
Well, I would simply point out, sir, that when you have the shock going through the system of the international finance system and people aren't sure about what anything's going to be worth, that is a stress test versus a orderly raise. People know interest rates eventually will go up, and they will make allowance for that. So I would just simply point out the practical models that we've seen and the behaviors of our moderating institutions here in Canada shows that the market was quite capable and resilient, and it was due to continued efforts to make sure that the market itself priced risk.
And I would just say, sir, it's my job to not be complacent about that.
So what you're saying is it's your job to push things, even though all you can do is point to a macroeconomic model versus actual experience.
It was evidence of 46 prior economic crises. That's actually real data as opposed to an economic model. And I'm happy to share those data with you, sir.
Yeah, I would appreciate that. Thank you.
Okay, thank you both for an interesting exchange. Ms. Boutin-Sweet, welcome.
Merci. Bonjour, messieurs.
Thank you. Good afternoon, gentlemen. Thank you for being here. I'd like to talk about the sharing of risk in the case of mortgage loans. For the time being, it's the government that assumes all these risks. And there is some talk about sharing it with the lenders. It's interesting, but I'd like to know whether you foresee that the lenders might pass on a part of this risk or the entire risk to the consumers. In other words, do you think that there is a possibility or some chance that this might result in an increase in mortgage rates offered by banks? I'll be answering you in English if you don't mind.
Vous me permettez?
You allow me.
So, first of all, the Ministry of Finance, the Department of Finance, is leading the consultations on lender risk sharing. Those are going on right now, and it will be for the government to decide where that goes. Our analysis of potential risk sharing, as has been presented in the consultation papers, is that there could be a modest increase in mortgage rates in the neighborhood of 10 to 50 basis points, so 0.1 to 0.5%. And that depends on the circumstances, but I would describe it in the following way. That if the risk to mortgage insurers goes down, then the capital we need to protect against that risk will go down, and therefore the premiums that we will charge will go down, and that risk and capital and rent or premium will go up on the part of lenders. So in large part, it's an in and out. It's a wash. We account for some friction in the way bank capital is calculated relative to how capital is calculated for mortgage insurers, and think on net, it would be in the neighborhood of just less than half a percentage point.
Donc, si j'ai bien compris, les taux d'intérêt pour...
If I've understood you correctly, then interest rates could increase by a very small amount, but the actual rate for the insurance itself might decrease by a small amount, and that might be a compensation. Yes, certainly. I know that it's only been 4 months since these changes have been implemented, but I'd like to know whether you've been able, over these 4 months, since the 3rd of October, to determine what the effect of these changes in the government has had on the first-time home buyers. I'm not talking about the Toronto and Vancouver markets that are exceptional, but more generally speaking, do you have any idea of what the effect has been on the market, particularly first-time home buyers?
Little early yet to see. There's some seasonality in our results, but I don't want us to avoid the question. And I'll refer the question to Steve Metal, my colleague who runs our insurance business. But I will say that we had expected some slowdown. And in terms of what I'd seen going into it, it's not even quite as bad as we thought. And the reason for that is because our forecasts had assumed a full delay of economic activity as opposed to a change in behavior. So if somebody purchased a smaller house but still participated in the market, that would offset the potential decline. Anyway, Steve, just observations from what we've seen in our
And
business.
we've certainly seen some modest declines in the volumes that we are underwriting, mostly for first-time buyers, in the order of 15 to 20% reduction in those volumes, and that is simply because borrowers who were near the top of that permissible debt service range are no longer able to qualify due to the stress test.
Vous parlez d'un déclin dans le nombre de...
You're talking about the decline in the number of purchases of houses or sales of houses?
Of overall volumes. So it's not an extremely large number nationally. We also expect over time that borrowers will start to adjust their expectations and will be able to purchase houses that are a little bit lower cost and lower value, and therefore have a smaller mortgage and be able to still enter the home ownership market.
Or if I may say, save for another year or two and buy those same homes. So it would be a deferring of that economic activity as opposed to an elimination of it.
OK. Comme je disais tout à l'heure, vous avez les résultats pour 4 mois.
You have results for a 4-month period. I'd like to know whether it is your intention to come back to us 6 months or a year from now. What would you consider to be an adequate period for you to be able to identify whether this has had the desired effect, whether it's worked or not? I think that it would take probably 1 year for us to have a full idea.
OK. On parlait tout à l'heure de l'augmentation de la dette.
We talked about the increase in indebtedness, personal indebtedness, that's been increasing for a number of years. If I figure 160%, you talked about 167%. That is, the ability of borrowers has decreased to make repayment. And in the last bulletin, I believe that 72% of this debt is in a form of mortgage debt. I think that you might have mentioned this the last time, Mr. Tremblay. As I say, it's only been 4 months since these measures have been in effect, but do you think that the present measures are in the process of responding to this particular issue? And the second part of my question is, do you see any difference from one province to another? I would say that, yes, it's probably the case, the result of these changes.
Higher indebtedness. So, for example, Alberta has comparatively higher levels of debt than other provinces. I think Calgary does, Vancouver does, and Toronto does than other cities. And so, for example, compared to Ottawa, we would see differences. And as I said, that we'll just wait and see how that plays out over the next several months.
Mais vous n'avez pas encore été capable de...
But you haven't been able yet to make an estimate of what this impact will be on personal indebtedness? It's too early for that?
And I know we're not solving for an outcome. We're just making sure that we are, on behalf of the government, controlling the growth in personal indebtedness. The trajectory it's on is a function of so many factors: low interest rates, income growth, job creation, immigration, not all of which is, of course, within any one of our control. And so we think it's our responsibility to not pour fuel on that fire.
Thank you both. I just would come back to Mr. Minnell for a minute. You said a decline of 15 to 20%. I don't think you were clear, or not to me anyway, on what. Is that 15 to 20% on first-time home buyers, or just if you could be a little more clear on that?
Yeah, that would be 15 to 20% of our overall volumes of mortgage insurance being processed or approved in that period of time.
Oh.
The majority of those borrowers are first-time buyers.
Okay.
In the neighborhood of 2/3 or so.
Okay, thank you. Turning to Mr. Fergus, we'll go to 5-minute rounds. Greg.
Bon, tout d'abord, merci beaucoup, M. Sidal, puis vos collègues.
First of all, we'd like to thank Mr. Sidal and the colleagues for coming here. I would say that it's been very enlightening. And I was struck by your statement where you say that it is possible that we can have too much of a good thing. I think that this is probably a point of view that I agree with. I think that we sometimes do have to moderate our desires. That is buying houses, and so you said in your remarks that your purpose was not to stimulate the Vancouver and Toronto housing market, but rather to avoid long-term consequences for the Canadian economy, negative consequences. And this is something that you are doing because you are focusing on the vulnerable group of Canadians who are very vulnerable to exogenous factors and who are quite indebted. I'd like you, Mr. Sidal, we did hear testimony from a number of people saying that there is no need for panic. It's not like in 2008, 2007 in the U.S. If we look at particular indicators, for example, people who are in payment arrears for over 90 days, we do not find ourselves in a similar situation in Canada at the present time. I'd like to put the question to you then. If 90 days arrears are not a good indication of risk for the future, what type of indicator would you consider to be a useful or reliable one for the future?
The question. First of all, the decisions were taken by the Minister of Finance on our advice, so I don't deserve credit for those changes, but of course we advised and supported them. So the too much of a good thing reference was my interpretation. Arrears are in fact quite low at about 1/3 of 1%, and indicators are that they're in fact trending lower, not trending higher in our country. There are some delinquencies issues that are trending up in a few areas. That's another indicator we pay attention to, as a result of this research I referred to in response to Mr. Alvis, just the overall level of indebtedness. And then I should say that our housing market analysis framework, which predicts nothing, is a model that refers to evidence of problematic conditions, actually analyzes 4 factors: overvaluation, overbuilding, house price acceleration, and there's one more that I've forgotten. Overheating. And we look at that includes several models that sit under it. And I suppose, if I may, it stands for the proposition that no one single measure is reliable. We have to look at a compendium of measures in order to understand the collection of what's going on in various marketplaces in Canada, and that we do attend to those.
So no one ever gets credit, Mr. Sidal, for taking steps which eventually avoid a problem in the future, because a problem doesn't arise in the future for which we can be thankful and grateful for. So stepping back a little bit, if we are trying to making sure that we do not have an overheated or overvaluated, overbuilt, sorry, now I forget the 4th factor that you raised.
Overheating, price acceleration, overvaluation, overbuilding.
There you go. You're seeing the current situation and you're feeling that you gave advice to the Minister of Finance that based on your analysis that this could be a problem. And I actually agree with you. So I'm just wondering if at what point will you be convinced that we've avoided this problem or this future problem?
Well, I suppose, as I said to your honourable colleague, I'll never be satisfied. It's my job. I think you rely on us at CMHC to make sure that, in fact, this is in our legislative mandate, that we promote financial stability and access to housing. And it's a balancing act. So I don't know where that will arrive. But what I do know is, with the economic growth we have in this country, increasing immigration, the possibility of increased foreign investment flows and low interest rates, there is a lot promoting the housing market. Housing is now at an all-time high as a percentage of GDP in our economy, and all of these factors point to an potentially too much of a good thing, and it's those combination of factors that I would refer to.
I'm sorry, gentlemen, 5 minutes goes by fast. Mr. Lippert, 5 minutes.
Mr. Siddall, thank you for coming today. I must say that I cannot believe that we had about 12 hours of witnesses here, people who are in the field, people who are experiencing this every day, and you come here with a statement that basically says they don't know what they're talking about. I'm sitting here in Ottawa and I know better than they do. I don't think I've ever seen a more arrogant presentation in my life. And so I think maybe you might want to take a minute and just step back and say, some of these people who are experiencing these issues every day might know something about what's going on here. You say it could happen, if it happened. And based on reading a book, I'm appalled. We have a situation in Alberta where we've gone through 2 years of job losses unprecedented in this country, and foreclosures have barely changed. So how do you justify what you recommended to the minister based on exactly what's been happening in Alberta for the last 2 years?
First of all, I apologize if I come across as arrogant. That's not at all my intention. We have people working in all provinces of this country, including Alberta, and we listen to our colleagues in all of the entities and all of the stakeholders who testified to you. Some of them are our clients, in fact. Some of them are our competitors, and we listen quite intently to them. I misspoke if you thought our conclusions came merely from a book. I was citing that as a particular piece of evidence for being concerned about the future, and I would reiterate that concern. And I must say that the problem that we worry about the most, sir, is unemployment. That is absolutely the single creator of somebody losing their home. That's the single risk we face. And economists talk about negative demand externalities. People in Canada will determinedly pay their home. So the fact that our arrears rates are very low is actually worrisome in the sense that someone will save their home by not buying a car, by not buying a fridge, by economizing on their groceries. That's our experience in Canada. And what that does is it reduces consumption. And when we reduce consumption, we reduce economic activity. And when we reduce economic activity, someone loses their job. And that is what we're concerned about.
What we've been told by people who deal with clients on a daily basis is that what you have done is you've done the exact reverse. People who were about to qualify first-time home buyers for a mortgage could not qualify under these new rules, so they've gone out and taken their dollars and spent it on vacation or on a car. What would be your comment to that?
I haven't seen those data, sir.
Well, read the testimony then that came before us.
I've seen the testimony.
Times.
I can't distinguish between opinion and facts, so I haven't seen the data.
Well, you're going by opinion, you're not going by facts. You've got no facts to justify what you did. You are going simply on the basis that something could happen, so we're going to take this action now. That's hardly data, sir.
With respect, I disagree. Our housing market assessment is based on models which are based on historical data. And our stress test is based on projections of our own insurance outlook. Those are data, sir. Those are not opinions.
Well, that isn't what we've heard for 12 hours of testimony before us here, and I'm extremely disappointed that someone like you is making those kinds of recommendations to the finance minister based on what we've seen here today.
I'm sorry for your disappointment. It's my job to be impartial, and I don't represent a particular sector. I represent the Government of Canada and CMHC. Those people have people they represent, and I would suggest that you may want to take that into account.
And this is another case of government saying, I know better than the people who are out on the street, the people who elect all of us. This is government sitting in Ottawa saying, I know better than the people who are dealing with this on a daily basis and try to. And how can you say that you're contributing to long-term economic growth when we've got multiple witness after multiple witness giving us concrete examples of how their businesses have dried up because of this one decision?
Their businesses have dried up because the government was involved in a market in providing stimulus, and the Minister of Finance decided to remove some of that stimulus. It's like you're at a party and the party has got too strong and you remove the punch bowl.
Oh, boy.
time for one quick supplementary.
I'll
Ron,
let
if
it go.
you
I'll
want.
let it go with that,
Okay,
Mr. Chair.
Ms. O'Connell.
Thank you very much, Mr. Chair. Thank you for coming. In fact, the only opinion spoken was not, as Mr. Lightpart stated. In fact, we spoke on this side anyways of the significant concerns, especially to the taxpayers who back a lot of the insurance. So should the market fail or should people not be able to pay for their homes, it's actually the taxpayers who are on the hook in terms of the support that the government provides. And you talked about it, and you talked about it with my colleague as well, but you said there is major support in the mortgage market. You just alluded to your analogy here, but can you elaborate so Canadians know, people who have invested in their homes, but also what the risks are if, you know, if the models are correct and if the indebtedness is too high, and if a crash or even a drop were to change with increase in a drop in terms of being affordability and people being able to pay for their mortgage, what are the risks associated to taxpayers given the fact that the government actually supports the mortgage market in the ways that we do? Some of the highest, what mortgage lenders acknowledge, some of the highest in the world in terms of when you compare us to the UK, Australia, etc.
Yes, the Canadian state, the Canadian government provides very substantial support in the housing market. I suspect it's close to, if not at the world peak, in several programs. First of all, mortgage loan insurance is about $1 trillion of government guarantees. The Home Buyers Plan program is a federal program that allows first-time home buyers to withdraw up to $25,000 from their RSPs. There are also provincial and municipal policies that offer further support. The capital gains exemption on one's principal residence is a further form of support. And then finally, our securitization programs allow constant funding for people in the mortgage business. So we're quite active in the housing market. And the concern is, as I said about removing the punch bowl, that the consequences can be quite significant. And it's not just a housing adjustment and people losing their homes, it's people losing their homes because of unemployment. If I'm in a position where I have too much debt and I don't buy a car, then somebody who works at a plant in Oshawa may lose their job. And that's the direct economic consequence of having too much indebtedness in an economy, that people don't have degrees of freedom.
Thank you. And this seems to be, and I appreciate that clarification, because we heard testimony that seemed to conflate the issue with first-time home buyers having access to the market, but really what this is intended to do is deal with indebtedness. So whether someone has overspent on a mortgage or has a mortgage and other consumer debt, that this is what the stress test is all about, that this is what is the concern, and I think you stated in your comments, not about slowing particular markets.
Not at all about slowing particular markets, nor frankly about directly removing first-time homebuyers from the market. It was making sure that people, because the government's involved in this marketplace, first do no harm and make sure you're not making matters worse. And that was the idea.
Thank you. Sorry, I don't mean to cut you off. It's just that I have to get to some other questions. In terms of data, we also heard a lot of testimony about lacking the amount of data in terms of consolidated data. The real estate associations have some, banks have some, mortgage lenders have some, and I understand Minister Duclos has asked for this as well in terms of your mandate in providing comprehensive data to understand things like foreign investment, and he laid out a number of data requests. Have you been doing this, and do you feel that it's significant enough to bridge the gap of the very clear missing data to help us fully understand the problems moving forward?
So the short answer to your question is it's not enough. Of course, I'm going to sit here and tell you we're doing things, and we are. And so we've been working on our own to address share of foreign ownership in condo units where we can get those data. The turnover rate in rental markets, we can get those data. Price and square foot data for newly built condominium in centers of more than 50,000 people. We're working with StatsCan on some new data, and we've got plans over the next 2 years to acquire more.
Thank you.
I'm being quick for you.
I can't stress how important that is because I think I'm going to steal a term if I can very quickly, but the idea of delinquency rates is a predictor of a rear view mirror. I heard that today and I'm stealing that. But without that data moving forward that you're speaking about, we can't predict and project properly in the economy. Thank you.
That's correct.
Thank you both. Mr. Albuteyev.
Thank you very much. I think I'm going to start on a bit of a different topic here. You said that there's some talk about that the steps were taken were not intended, and then in the meantime there's unintended consequences that appear to be. And if we're to take all this out there, that we can say that if you said that you intend to do what you did, that means we hear back from builders in our communities, in our ridings. We know that people lost money or they cannot sell their properties anymore, so they end up with no profit or below zero. We know that there's another interpretation to what you did, which is to encourage more or less the rental market versus the home builders, which is another consequences of the whole thing. And another perception is what you are imposing policies on Canadians, especially first home buyers, their dreams, their opportunities, what they want. And if we look at Alberta market, we represent Alberta, we see that this policy have impact a lot on Alberta. Small businesses in the wrong time, while during the difficult time of economic downturn in 2007, 2008, until now, Albertans have managed to really hold their market and to hold their mortgages, and we've seen the best results of all. So with this controversies surrounding what you have suggested to the Minister of Finance, can you clarify exactly why you think your policy is doing benefit to Canada and Canadians? And we know that Vancouver and Toronto markets has driven your policy in many cases. How does that represent in percentage-wise compared to the rest of Canadian markets, and whether that was a good blanket policy that really going to be fair for all Canadians?
So the Minister of Finance makes policy for the nation as a whole, and it's on that we advise him. We did not target, he did not, nor did we in our advice target Toronto and Vancouver. House prices and indebtedness are up across the country, and again, I would refer to the Bank of Canada's FSR for evidence of that. The impact on first-time homebuyers, it wouldn't be fair to say we were targeting them or we intended to hurt first-time homebuyers, and in fact we're quite sympathetic to the impact on those individuals. What we were trying to do was save long-term economic growth of this country from the possibility of a recession triggered by high house prices and high levels of indebtedness. Bless you.
So we've seen an evidence in Alberta, back to that Alberta has weathered the economic difficulties, and we haven't seen any move right there. So after 10, 15 years, okay, we haven't seen. That's enough evidence for you to really think to million before you put forward such recommendation to the minister, isn't?
We certainly took that into account as we did the price adjustments in Toronto, and we were concerned about the future. The past does not predict future, sir.
Toronto and Vancouver market represent of the overall market in Canada?
Steve, do you have those data or no? We can respond if we don't have it with us.
I don't have the exact data with me, but
we can provide that to you.
Well, we need to know that for sure, because really, again, we need to know that, and we need to know that impact on the rest of the market, because really, if you're going to come up with a policy, it has to be fair. At least has to be balanced somehow. And the evidence we have here that this policy was not really balanced whatsoever. So some people get looked after somehow. The government taking the steps, the Bank of Canada's recommendation, your recommendation, you hold over $1 trillion or almost $1 trillion of mortgage insurance across the country, and you look after your best interest in a way. But on the other side, there's a lot of people around the country that get hurt, and a lot of new home buyers, new generations, baby boomers, that they will look in to find a first step in investment that they don't have that anymore.
Sorry, was there a question, sir?
The question is, do you believe that this policy was really a balanced policy?
Yes, I do.
After all the consequences around it?
I'm even more convinced now than when we advised the minister without understanding the impacts. Without understanding the impacts, that's not a correct statement. Without seeing the impacts and only predicting it.
Final question. Would the new risk-sharing rules make it more difficult for rural Canadians to access mortgages or not?
The new, which rules?
The new risk-sharing.
There are no rules that have been promulgated, and one of the questions in the consultations is to understand the impact on rural Canadians so that the policy would account for that. So that I would not make that prediction, sir, no.
But it's not predictions.
Sorry, Zihad,
Yeah?
we're a little over, and we're tight in time. Mr. Sabara.
Good afternoon, gentlemen, and welcome. I don't think there's anything more important for Canadians than their home. I attended a pre-budget consultation in the city of Toronto with a member from York Centre as invited, and I would say half the comments that we received and questions we received from the residents was with regard to our housing market. In terms of affordability, in terms of accessibility, and in terms of ensuring that, for one voter, that her kids would be able to buy a home and live in the neighborhood that they grew up in. So it's very topical, as you can imagine. 2 days ago, we had a house in Toronto listed for $1.5 million, sell for $2.6, I think it was. It was $1 million over. So there's obviously something going on, and that Canadians are concerned, but they want to know that things aren't going to go astray. Mr. Seidel, you've commented quite prudently on our housing market for the last several months in terms of identifying the risks and vulnerabilities. I've read your speeches and gone over the results and everything like that. And I think it behooves us, sir, to make sure that we deliver the message that CMHC, since 1954, or whatever the year was, is there to assist Canadians to enter the housing market. And we must ensure that they do so in a prudent manner. That, as the Bank of Canada comments, that the quality of the indebtedness that Canadians take on going forward is a good quality. We don't want individuals overstretching themselves, especially if there's an exogenous shock or anything to that matter. A number of countries have undertaken actions for their housing market, be it Australia, Switzerland, New Zealand, Hong Kong, Britain. And I would like you to answer, because I think what we've done is prudent. We need to ensure financial stability. We have a home ownership rate of 69%, I believe is the number. But Canada is made up of regional markets, not one national market. So my question is, when we're looking at the Canadian housing market, what other pieces of information do we need to improve our decision making? Because if you look at Australia, they seem to have more data, the plural of it, than we are able to have. So what more can we get to allow you folks to even do a better job than you're doing?
I think some of that let me just take a step back and first of all refer to this affordability question, because I think it's an important point that you make, sir, and that is, the more we support demand, the higher prices will be, all things being equal. And so if we make it easier for people to buy a home, that will increase demand, which will increase prices. And so we've got to think about these issues in affordability terms, and in fact, some more attention on the supply side, as I've said in my speeches, which you and my mother are the only people who've read. Thank you, sir. Is a pressing need, that we need to orient ourselves as much towards supply as demand. On the data point, we've been working very hard, and we feel it's our responsibility as the servants with respect to housing in this country to get for Canadians in consultation with OSFI and StatsCan and other people. And we've even talked to colleagues at the Department of Finance about different ways to get that information legislatively, and we're working on that over the next year or two.
Can I just follow up? 1 minute. The one thing I will say is, I think we had some data come out on the number of unoccupied homes across Canada, and I think it's over 1 million, if I'm not mistaken. Let me just make sure. Actually, at 1.3 million empty or temporarily occupied homes. That's an issue. I hear that from friends and that live in condos in downtown Toronto. When the Elections Canada tried to come enumerate everybody, that a lot of doors remain closed because the people weren't here. So I think it is an issue for many Canadians in terms of foreign investment. You hear it anecdotally a lot. be it in Vancouver, be it here in Toronto. So I think that's something we need to focus on. But I do want you to reiterate how important it is that the quality of quality of indebtedness, that we don't let it go too astray.
Yeah, quality and magnitude. With respect to foreign investment, in fact, the data that we have suggests that it's less than 5% of homes in Canada are owned by non-Canadians. I'm not concerned about the status of it now. It's a factor, not the factor. However, the outlook for increased foreign investment and increased immigration is another source of potential demand that will push prices and affordability higher. And there's a lot of money that wants to leave China that can't, in particular. And that's a country with a very high savings rate and a proclivity to invest in real estate. So those are factors we need to try to measure better. I agree.
And
Thank you. Sorry, Francisco, you're over. Mr. Boulris.
Merci, Monsieur le Président.
Thank you, Chairman. I'm happy to be here on this committee today. Quite quickly then, I'm a member for Montreal constituency, Rosemont Petite Patrie, where the great majority of these people are tenants. But there are lots of issues that are of concern with respect to the price of a property and the ability for young families to own a home. In some cases, they're forced to make a choice between leaving Montreal and buying a house in the suburbs because of the fact that housing is too high. There's something that you mentioned previously. You say that you were sympathetic to first-time home buyers. But beyond this matter of being sympathetic to people who are trying to buy a house for the first time, what exactly can you tell them? Is we're going to be giving you a helping hand?
And I don't think... Pardon?
Ils n'en ont pas de maison.
There are people that don't have a house.
If we were to support them infinitely or even more to buy a home, they could be in a position where they would lose their home through unemployment and too much indebtedness. So that was a concern. We're also supporting the rental market through a program that was announced in the last budget called the Affordable Rental Housing Innovation Fund and the Affordable Rental Housing Financing Initiative, both of which will increase the innovation around and the supply of rental housing across this country.
Une minute encore. Vous avez dit...
You said, in reply to a question from my Liberal colleague, that for the purchase of Chinese investors, particularly a property in Vancouver, you don't seem to have any particular concern about this, but there would appear to be a phenomenon that is contributing to this a bubble in Vancouver. You are looking at it, but you're simply observing what is taking place.
Suggested it is a factor. It is not the factor. There is certainly foreign investment in all major international cities, in particular Toronto and Vancouver in this country. I'm even more concerned about the future of it than the current state of it. It is certainly a factor, but in the work that we've done on the factors underlying escalating house prices, the three principal reasons for increased house prices are low interest rates, increased incomes, increased job, and increased immigration. And that tends to arrive in Vancouver and Toronto. On top of that, there's foreign investment, certainly, domestic investment, which is an even larger factor than foreign investment in our country. There are income and wealth effects, and then finally, constricted supply. In fact, in our work, the evidence would suggest that the two markets with the slowest and weakest supply response are Vancouver and Toronto.
Last question, Mr. Graywell.
Thank you, Mr. Chair. Thank you for coming today. Really appreciate it. I think the quintessential question, I think, for the government, the financing department, and most of the people involved is the balance between stabilizing the housing market and making sure that it's, that Canadians have confidence in the housing market, and then making sure that there's access to housing. So a lot of testimony we heard from was that you're over-regulating. But then I go back to 2008 and the lessons learned in the United States and saying that, a lot of Americans probably would have appreciated a little bit of regulation then because of when it unraveled so quickly. My colleague spoke about data, and we asked a lot of questions on the data that's being looked at to come up with policy recommendations. And we do have concerns on the data elements. Can you please speak to, again, in depth on what you think the government should be looking at, and currently right now, because even in your testimony today, you spoke that you're still looking at the housing market. What indicators are you guys looking at, and what do you guys think is the best way to judge if we have a stable housing market in Canada?
So, first of all, I'll say that this question of the balance between access and financial stability is a core concern of CMHC. In fact, it sits in our legislative mandate that we're to attend to both. And achieving that balance is something that we worry about a fair bit. I can't find my notes on data. Oh, I know where they are. Go ahead, Michel, if you've got it there.
Yes.
Michel Laurence, who just approached the table, is in fact the person responsible for this and has done a very, very good job in trying to close what we've identified as these data gaps. And Michel will just share a little bit more.
So some of the Evan has mentioned a couple of them that we're really focusing on. So investor demand for property. So that again is the foreign investment, but also Canadian investors, because as markets gain for a number of years, people start speculating that it's going to keep going, so they get into the market and start buying properties also. We're also, as Evan mentioned, looking at supply issues, so we're trying to get data on supply, on what regulations exist across different municipalities. Again, we'll have to collaborate with municipalities to get that, but what regulations exist that could slow down the response of supply to demand. Land availability is another thing that we're looking at. We've heard that when we did expert roundtables as part of our national housing strategy, that could be an issue. And we're also looking at motivations of home buyers. So what motivates a home buyer and when to buy a house. Those are some of the data that we're looking to, data gaps that we're looking to fill over the next couple of years.
Is there any consideration into looking into in the market itself, the question of leverage, as in how are people qualifying for mortgages? I've always felt that we're not asking the right questions. Now, this may not be in your mandate, but if you want to speak to it, I'd really appreciate it.
Yeah, so we've thought about a loan to income. Now, let me just say, before I get too far down this path, that it's certainly our view that we need to digest the changes that were announced in October and not to think about the next series of changes. But we're the government to ask us about other policies. One such policy that's been enacted in the United Kingdom, for example, is a loan-to-income limit as a way of addressing the concern that you mentioned.
Thank you. My last question is that because the housing market is very regional, as in like the story in Brampton East, in my neck of the woods, is a lot different from the story in Alberta, like many of my colleagues talked about. And funny enough, like from one end of Brampton, the story is different to another end of Brampton. And what's happening in my city is that supply is really driving up prices. Builders, in January, the forecast across the country in terms of construction startups, again, is a record high. And so, and then when you're driving past a new open house or a model home, and there's a lineup of people willing to, spend $700,000, like 6 hours in line to spend $700,000 to buy a house in the area that they want to live in. And then I come back to here and I hear all this testimony saying that, the housing market is sound, but there seems to be something wrong. I know you're still looking at it. Would you say that today that the market is stable and that Canadians are okay purchasing their homes with confidence?
Oh, we have and I think it's among the most admired housing systems in the world, and deservedly so, and we have for a while. It's our job to make sure we continue that strength. But I would say in general that we have a healthy market. We just don't want it to be overly healthy. Does that make sense?
No, it absolutely does make sense. I think that, again, we go back to the balance, right? We're trying to achieve the balance between the stabilization and the access. And I think that we are achieving that balance, and it'll be interesting to see how the numbers play out in the next couple of months. Also, last question, just for my own personal opinion.
Your
It's a really good question, Your Chair.
Okay, what I'm going to do, for fairness here, I'll give you one question and Mr. Albuteyev one question.
Excellent. I mean, Ziad's a good friend. In the history of the organization, when things have settled down or data points have changed, have you recommended policy to be retracted? As in this, like, would you see a scenario moving forward where the stress test is taken away to stimulate more home purchases?
I don't know exactly what we've recommended, but certainly those policies have gone both ways over time.
So there are been corrections in
Sure.
terms of, yeah. Thank you
Sure.
so much. I appreciate it.
Mr. Albuteyev,
Thank
very
you.
last question.
Yeah, thank you, Chair. Thanks, Raj, too. The question is, Mr. Sidel, last year you made comments suggesting that the government should consider increasing the minimum down payment required to buy a house. The first part of the question, do you stand by these comments? And the second part of it, does the government considering these changes?
Thank you for the opportunity to clarify what I said. I did not, in fact, say that this was something the government should do. I said it was a policy that we should evaluate for the future. It's not a current concern. As we look at a range of different alternatives for the market, which is CMHC's responsibility, that's one.
So if you were to consider
That was your
that's it. Thank
one.
you.
I'm sorry, Zihad. We'll have to end it there because we're into our next hour. So we will thank you, Mr. Sidel, and those accompanying you. Thank you for your interventions and your comments.
Thank you.
We will suspend for a couple minutes while the parliamentary secretary and others come to the table. order, please. If we could get the witnesses to the table. Okay, for our second hour, which is now 45 minutes, on our study on the Canadian real estate market and home ownership, we have representatives from the Department of Finance, as well as the Parliamentary Secretary, Ms. Padbot Taylor, before us, Mr. Rod Stewart, Associate Deputy Minister, and Ms. Leach, the Chief Housing Finance Capital Market Division. Floor is yours. Who's starting? Ms. Taylor, go ahead. Ms. Padbot Taylor.
Thank you very much. Good afternoon, Mr. Chairman and committee members. Il me fait plaisir d'être ici parmi vous.
It's a pleasure for me to be present among you to talk to you as Parliamentary Secretary for the Minister of Finance, the Honourable Mr. Bill Morneau.
Stewart and also Cynthia Leach will be here to help me as well if there's any questions that I need some assistance with. L'une des plus importantes responsabilités du gouvernement.
The important responsibility of the Department of Finance is to ensure that a Canadian housing market is a dynamic one, competitive and stable.
Focused on housing issues since coming into office. This has included a series of carefully targeted measures to ensure stability and to promote affordability. Today, I want to clearly explain the benefits of these changes and why our government has taken action. Investing in a home is the single and largest and most important financial decisions that most Canadians will make in their life. Home ownership is vital to the economic and financial health of Canada and middle-class families. It is vital that we do what we can to ensure that the market is stable and provide peace of mind to homeowners across Canada. Especially in markets like Vancouver and Toronto, there is a risk that some middle-class families buying their first home could be taking on high levels of debt as house prices climb, reducing the likelihood that they would be able to afford their properties over the long term if economic situations or circumstances would occur. Those who already own their homes want to know that the market is stable and that their most important investment is safe, and we've heard that quite a bit during the testimony. Affordability and market stability are therefore issues that concern many middle-class families. These concerns are real, and this government takes them extremely seriously. Last October, Minister Morneau announced tighter mortgage insurance rules, among other measures, designed to improve stability, reduce risk to taxpayers, and ensure everyone is playing by the rules. The more robust mortgage rate stress test for insured mortgages is meant to ensure Canadians are taking on mortgages that they can afford, even if interest rates go up, or if their income drops in the future. Other changes were also made to target safer forms of lending. These measures are focused on addressing the buildup of housing debt across Canada. As you have heard, these measures will require borrowers and lenders to make adjustments in the short term. Fundamentally, these measures are important in containing risk to preserve the long-term stability of the housing market in Canada. We have seen in other countries that what can happen to the housing market and the overall economy when housing risks and leverage are not appropriately managed. In these situations, it is often the middle-class families who suffer the most. Ultimately, the government's efforts to contain risk in the housing market will support our plan to create conditions for economic growth over the long term. Growth that will benefit the middle class and those working hard to make it to the middle class. One fundamental point that has yet to emerge clearly in this committee is the fact that the government's support for the housing finance system remains significant, especially compared to other jurisdictions like the US, the UK, and Australia. Mandatory mortgage insurance promotes the extension of low-cost credit to a large proportion of home buyers, and many of them first-time home buyers, and mitigate risks to financial systems. No other country supports mortgages insurance like the Canadian government does here at home. At the same time, discretionary mortgage insurance and government-sponsored securitization programs support access to low-cost funding for mortgage lenders. Some lenders have built their business models around this support, which will continue to be available for mortgages that conform to new requirements. They can also continue to provide loans that do not meet the new requirements, but on an uninsured basis. One element where we know we need to make greater progress is a better understanding of the factors that drive developments in housing markets. This includes the impact of purchase by foreign investors on demands for homes, but it also includes factors that impact the housing supply. This is why that in Budget 2016, we provided funding to Statistics Canada to gather data on purchases of Canadian housing by foreign home buyers. Work on this initiative is ongoing. We have also created the Federal, Provincial, Municipal Working Group on Officials to review the range of factors affecting regional housing markets. In addition to sharing data and identifying information gaps, this group has been looking at factors relating to housing supplies in Canada. A healthy supply of new homes is an important component of any strategy to promote access to housing. Which brings me to affordability, Mr. Chair. Our government knows that we need to work with provinces and municipalities to provide housing that meets the needs of the most vulnerable citizens. This is why we are also acting on affordable housing fronts. Dans le dernier budget, Monsieur le Président, the government...
In the last budget, the Government of Canada devoted $2.3 billion to affordable housing and is working in close cooperation with provinces and municipalities in this matter. As you probably know, the Honourable Jean-Yves Duclos, Minister of the Family and Social Development, is in the process of developing a national strategy on housing. We know that the financial security of Canadian families does require a sustainable level of indebtedness and the stability of housing markets. The federal government is taking its responsibilities seriously by ensuring that the strategic framework for housing remains a dynamic one, as well as competitive and stable, and that it protects all Canadians, as well as the economy, against the possibility of excessive volatility on the housing market. That is why the Minister of Finance has taken action on 2 occasions in the first year of our mandate and is continuing to monitor this issue very closely. The measures aimed at ensuring the stability and solidity of the housing market, as well as the financial security of Canadian families, are part of the government's economic plan, based on the idea that when the economy works for the middle class, then it is working for everyone.
That benefits all of us. Nothing could be more crucial than protecting what, for many Canadians, is the most important investment that they will ever make in their life. At every step of the way, our government will continue to listen to Canadians, homeowners, and stakeholders as it seeks to ensure a healthy and stable housing market for the benefits of all Canadians. In that spirit, it gives me great pleasure to be here today to take some of your questions on behalf of the Minister. Thank you. Merci.
Thank you, Jeanette. Turning to the first series of questions, and we'll go to about 4.5 minutes each so we can get everybody on. Mr. Sabera.
Bon après-midi, Madame Petitpas-Taylor. My first question is with regards to the changes that were made. Whether when you make these sorts of changes, whether you may not be able to use a consultative process. I'd like to, if you can comment on that front, please.
Absolutely. Thank you very much for the question. I believe that we would think governments past, when policies have been made in the housing market, some consultations are able to be made within government departments. But one thing is for certain, when we are looking at these types of policy changes, it is truly important to make sure that there's no breach of confidentiality, because there's many sensitivities when it comes to these types of issues. Our government has consulted on a number of fronts when at all possible, let it be on the environment or whatever the case may be. But when it came to these types of situations, when it comes to changing mortgage rules, it's truly important to make sure that we're very sensitive and that we are very prudent with the information that we have. And as a result, that is why that there was no public consultation that was held regarding these matters.
Merci beaucoup. The second question I'd like to ask, and it may be for the officials, our government has invested $440 million into CRA on tax avoidance and tax avoidance and tax evasion over 5 years. We've taken a number of measures to ensure that all organizations, Canadians, that everyone's paying their fair share of taxes to support those social services, the social programs that we so value in this country. One of the changes that was made on the October 3rd announcement by the Department of Finance was, and I'll read it just verbatim, improve tax fairness by closing loopholes surrounding the capital gains tax exemption on the sale of a principal residence. Can you comment on that, please? Or
yes, by all means. So one of the things that we did was to clarify the rules for the claiming of the capital gains exemption. This gets to be quite technical, so if you like, I can provide it in writing, but in essence, it ensures that only those who are eligible to the exemption get to claim it. It furthermore ensures that reporting of sales of primary residences will from now on be made in all circumstances, whereas before it was only under the circumstances in which tax was owed. So now all sales of principal residences will be reported to the CRA. And in addition, the CRA was provided with the power to audit on a permanent basis the past transactions in houses, so as to ensure that there was no tax avoidance or evasion. So in all, we reinforced the powers of the CRA in both rules and in terms of their audit function.
Okay. And one final question, going back to the Parliamentary Secretary, to the Finance Minister. I would like for you to comment just how important it is for our government to ensure that we have a sound and stable housing market.
Thank you. Well, first and foremost, when these policies or these changes were brought forward, they were brought forward because we want to really help support a healthy and stable competitive housing market within our society, and also to make sure that our economy is stable as well. We have put measures in place to protect borrowers because we recognize that there's a high level of debt, and we truly just want to make sure that we're here to protect Canadians. That's what it's all about. It's about, protecting Canadians and making sure that they have a stable debt load.
Thank you.
Francisco, Mr. Albas.
Thank you, Mr. Chair. I just want to thank the Parliamentary Secretary and the officials for coming today. Certainly, I've been in your seat before working as a Parliamentary Secretary and carrying water for my minister, and obviously you weren't there for these changes. And also, so I can't hold you accountable for it, but I can hold you accountable for what you've said. So the president of CMHC just said that the changes that were brought in October 3rd were not in response because of Toronto and Vancouver's housing markets. You, in your opening statements, have said otherwise. Who's right?
My comments with respect to this is that I can tell you that we have seen that the situation was acute in Toronto and in Vancouver. However, the borrower vulnerability is not just in Vancouver and in Toronto. The borrower vulnerability is all across Canada from coast to coast to coast. Those markets were hot, yes. However, it's the borrower vulnerability that we're very concerned about, and that's why these policies and these changes were put in place.
The president just said completely otherwise, that the changes were not made because of those exclusives, but we'll move on. In your comments, you talked about stability versus affordability. Now, Finance Canada, from my understanding, has always tried in this policy sphere of housing to have both stability, affordability, but also competition. So did you understand, and I'm asking the officials if you can't answer, did you understand when you're upsetting the competitive balance in the mortgage marketplace by removing portfolio insurance?
I would not put it in those terms, sir. I would say We understood that there would be some structural adjustments necessary in the marketplace as a result of the reduced availability of portfolio insurance to those firms that are dependent upon it to finance their business.
Okay, so in other words, you knew that there would be a response to the changing of the rules, correct?
We knew that there will be some adjustment in the marketplace over time.
Okay, and that includes consolidation of some of the monoline lenders, but it also suggests that there would also be closures of some smaller competitors that just couldn't operate under the new set of rules. Is that correct?
So if I may, I'll explain that what we've done at the margin here are changes that have been made very much at the margin in terms of the access to the government's support for housing. But in this respect, what we have done is change the rules for portfolio insurance, which was used by these lenders to access funding. And we have made those rules align with the terms and conditions that you must enter into when you buy transactional insurance for high-ratio houses.
And you said earlier structural changes. Then you anticipated that this would cause the marketplace in terms of, perfect competition. We talk about many firms competing for different customers. In this case, there are going to be less firms competing in that sphere, and there's going to be larger firms. Is that correct?
What we did was reduce the access to the support by the taxpayer for those firms that were reliant upon it.
Okay. Did you understand that you were going to increase borrowing costs for Canadians with these changes, and did you intend to do so? And do you understand the mechanics behind these rate increases?
We anticipated that there would be some transitional issues associated with the adoption of these rules, and that the marketplace would adjust over time. We would not predict an increase in mortgage rates, but we would say that it would be, in the circumstances, possible that they would rise slightly.
What evidence of risk was present to eliminate portfolio insurance on refinance and rentals when there's a delinquency factor of 0.24% in the current portfolio, CHMC?
Again, looking at this from the broader perspective, it was a public policy decision to...
Very specific question, sir.
Yes, I'll get to your question if you don't mind. Sorry?
Go ahead, Mr. Stewart. You have the floor.
So we were looking at this from the point of view of what is the right amount of support to provide by the taxpayer to the marketplace. And in this case, we were aligning the same profile of risk for the high and the low ratio mortgages.
Evidence of risk?
Overall levels of non-performance in mortgages are low across Canada generally.
So what evidence of risk was present?
The risk here is that you have a situation where in marketplaces and in markets where they're fueled by low interest rates, you have a growth in the market and a provision of credit backed by the taxpayer, which leads people into situations of undue risk and ultimately threatens the stability of the lender themselves.
So what evidence was there to suggest that high ratio restrictions were needed to be applied to low ratio mortgages?
I would not put it that way. I would say what we were doing was making the rules and the access for low ratio to portfolio insurance the same as for high ratio.
Okay.
Mr. Boulris.
Merci. Merci, Monsieur le Président.
Thank you, Mr. Chairman. I'd like to thank our witness and the Parliamentary Secretary for being present among us. Let me go put a question similar to that I put earlier this afternoon. I know that you've often talked about providing help to the middle class and those who would like to join the middle class. What I would say, we would have to help homeowners and those who are attempting to have access to home ownership. And this is a concern that is shared by many people. It is the case in our community in Montreal, in my constituents in particular. And one of the activities I think that is very useful, we, as a member of parliament, is you're invited to schools, and children will put questions on all sorts of subjects. And one of the questions that comes up quite often is the cost of housing, cost of condos. They hear talk about this at the dinner table, and they ask me, what can we do so that our parents can buy a house or a condo more easily? And what I find quite unfortunate is when I have to go back to the schools, I'll have to tell them that the federal government has put obstacles in the way of their parents that will make it more difficult for them to have access to home ownership. how can you justify this to all these young families that want to fulfill their dream of buying a home? First of all, I don't think that I would go so far as to say that we've made the situation harder for them. What I would say is that we are helping them to manage, in view of the debt level that's very high in the country, and help them keep their house. And maybe that their first house will not cost as much, but at least they will be able to stay in their house. If we're looking at the general situation, the short term and long term, and our aim is to protect Canadians from a very high debt level that is increasing. Yes, we could look at it from the point of view of debt, and we could attack it from a different. I think the interest rates on credit cards would be an interesting approach on the part of your government. But we've heard from lots of witnesses in front of the committee who have told us that they were surprised to see these measures that were recently announced because they were not consulted. And I think that this is quite surprising, because for the past year and a half, you've undertaken lots of consultations, but on this particular issue, there was very little consultation. And we heard from witnesses that it didn't take place. Why?
And as you've indicated, our government has really taken a lot of pride in consulting with Canadians on different issues over the past year and a half. And I know personally I've done a number of consultations in my riding. When it comes to this specific issue, however, we have to recognize that there's sensitivities to the information, and also we have to treat this information very much in a confidential way. We could see that with a leak of some of this information, there could be material commercial impact. People could benefit from this. So we really want to make sure that this information is treated in a confidential type of manner. Fait tout ça pour dire la question de confidentialité est très.
In other words, this issue of confidentiality is something that does require attention, and the minister did consult with the Bank of Canada, CMHC, as well as the Superintendent of Financial Institutions, so there was certainly a certain degree of federal consultation. I'm not quite satisfied. It seems to me that this was done so that people would not be aware of what was happening and the effect that this would have on access to home ownership. I'd like to know what you intend to do in concrete terms. And this is a reality I'm very familiar with in my constituency, to provide support to housing cooperatives. This is a very interesting alternative form of ownership that does allow access to housing for families that are less well off. Do you have any particular strategy for these co-ops?
I can, however, point to the fact that the National Housing Strategy, which is underway under Minister Duclos, is looking at support for forms of social and affordable housing, and that remains. The consultations have taken place, and the decisions to be announced.
Thank you all. Ms. O'Connell.
Thank you, Mr. Chair. Thank you all for being here. I have a question starting off with the officials, actually, because you can speak to perhaps what happened in the past, talking about consultation. When we're talking about consultation on items that could potentially have market implications, as we just heard from the president of CMHC, in the past, previous governments have also implemented changes to affect the housing market, mortgage market. Can you comment as officials in terms of consultations then, or has this been a policy in terms of protecting market sensibilities? It's attributed to one government, but in terms of a department policy.
Yes, by all means. We have now made 6 changes, 6 adjustments to the rules for mortgage insurance stemming from after the crisis in 2009. And in all of those cases, the announcements were made without consultation, in formal sense, with the marketplace. Having said that, I can assure you that we have a very active dialogue with the marketplace, and we ask them continuously about their views with respect to housing risk and the access to mortgage insurance, and seek the views. I can furthermore say that in this particular case, the change in the stress test, which was a modest adjustment to an existing rule, was being supported by most of the stakeholders that we spoke to before we made the decision.
Thank you. And getting back to Ms. Petitpas-Taylor, the comments by my colleague here, I want to clarify, because I understood your comments actually to say that you were not these policies were not focused on hot housing markets. But in fact, I heard that your comments were exactly in sync with what we just heard from the previous testimony, and the fact that the object of these changes was really about debt load. And we can see in the reports and the testimony, in fact, that it's not just Vancouver and Toronto. Montreal, we heard testimony, and I believe you were here for that too. Montreal was in that list, not because of high housing or property value prices, but in fact, debt load, consumer debt load. So can you clarify, are your comments in sync with what we just heard in the earlier testimony, that the object of these changes were not in relation to hot markets?
Thank you for that. And yes, I acknowledge that the situation in Vancouver and Toronto is acute. However, that the borrower's vulnerability is not limited to those areas. If we look at the debt load from coast to coast to coast in all different cities, towns, villages across this country, that's the concern, is the debt load. And yeah, absolutely.
Thank you. And if I have a follow-up, I just want to talk about it to whomever can answer. In terms of, again, following up on my colleague's question, in terms of the competition and the mortgage lender models, I asked this question to some of the witnesses who were concerned about competition. However, could those same models exist if they didn't have this? And we heard in the earlier testimony, I think there was something like $1 trillion in backed insurance. Could these models exist without the already taxpayer and government interventions? And is this not more of just a protection of that investment?
In large measure, the development of the lenders in the marketplace that rely on portfolio insurance was a product of the fact that the risks associated with the lending could be transferred to the government.
So, again,
I think, Mr. Stewart, you wanted to come into that earlier question that Ms. Petitpas-Taylor answered.
Oh, I just wanted to note, as has been noted by the Bank of Canada in its financial system review, that the level of vulnerability is rising rapidly, and that the borrowers who have levels of loan to income over 450% have increased significantly across the country, particularly in the markets of Toronto and Vancouver. So just in supplement to the answer that was provided, it is an issue across the country, and but it is also an important issue in those markets.
Go ahead.
Thank you. And just following up on that point in terms of lender support, and ultimately, if the competition is good, I don't think anyone is denying that fact. However, with the level of investment that Canada makes to allow for this competition through backing that insurance, one example, changes or people's inability to pay, because sometimes those are the higher risk individuals that we're looking at there. What would be the impacts to the government's investment and Canadians' investment, in your opinion, if we didn't take these market risks and this debt load risk very seriously? And I think the earlier testimony pointed to maybe trying to ensure that there isn't too much of a good thing in terms of allowing too much debt to accumulate without really looking at the fact that if we don't cool it off a little bit, people will outborrow what they can afford with any market changes. So my overall question is just really, do you see the risk to the overall investment as the real cause of concern if we don't protect and put these moderate tests in place to ensure people really can absorb those market changes?
When we think about stability risks, we think about them from two perspectives. The perspective of the system, which is the institutions largely that provide the loan and their stability, and also the borrower's vulnerability. And in this case, we were looking very much at the borrower side of the equation. The system is stable. But borrowers, there are a segment of borrowers who are at great risk. And you could look at all of the changes that we've made in mortgage insurance policy over the last 7-8 years as reining in the capacity of borrowers to take excessive risk.
Thank you.
Mr. El Boutef.
Well, thank you. The question is to Madam Parliamentary Secretary. I gather from your opening statement that somehow the policies that have been pushed forward, which left a lot of consequences for the small builders, for the credit unions, for small lenders, like for overall a big industry in Canada, other than in Toronto and Vancouver. And you mentioned the national housing strategy. As if I gather from what you've said that those policies are going to encourage the government to have a national housing strategy. In any expert, in any people looking at it, they kind of see that the government is going to replace those industries that they are in business and is going to really take that national strategy to start become in competition with these industries, which is really against what we call the free market and against the encouragement of small business owners. And in the meantime, it's going to cause a lot of loss of job opportunities and will put a lot of doubts in the market. Did I gather right from what you said or not?
I mean, perhaps I didn't understand your question appropriately, but the National Housing Strategy is put in place in order to allow vulnerable Canadians to enter the housing market. And that's really and truly what we envision with respect to the National Housing Strategy.
And the National Housing Strategy, and you're talking about affordability. How can that happen? And in the lack of protection, I mean, you talk also about protection of investment. Now, how can we protect people's investment if we're not allowing them to invest because they're no longer able to do so?
Canadians are still able to invest if they choose to. We are simply putting some measures in place to make sure that we are able to support a healthy, stable, and competitive housing market. That's really what this is all about. As indicated earlier, perhaps some home buyers perhaps won't be able to buy that high-income home that they wanted, but it doesn't mean that they won't be able to enter the market. We simply want to make sure that their borrowing vulnerabilities is managed.
But the measures that's been taken is not allowing many Canadians to enter the market as first home buyer. I mean, that's exactly. I mean, the opposite is what you're saying is. I mean, yes, in theory you're talking about encouraging, but in reality the policy out there is not going to allow those people to enter the market. How can you justify that?
I can take this. So there is what we've done. Just to be clear, with respect to the first-time homebuyers and the interest rate stress test, is we've just extended the test from a segment of the market where it already existed. It already was in place for borrowing under 5 years. Now it's in place for mortgages with 5-year terms and over. It has a transitional effect where first-time homebuyers who were previously qualifying at very low 5-year contract rates will no longer qualify. We see that as a transitional effect, and we see it as being subject to changes in consumer behavior. So there's the possibility here that a first-time home buyer who does not qualify for the size of home they want to buy previously will buy a smaller home or save.
Okay, based on your data, based on your information that you're not going to release because of confidentiality and maybe the effect is going to leave on the investment in the market overall, when do you see that you'll be rest enough that the policy is no longer viable and maybe the government should retract on that and then should open again for people to come back and join as first home buyers, as a middle class, and when and how? How do you see that going to happen in a time fashion?
I don't know if I could answer the question of when, but I could answer the question under what circumstances. So obviously we've taken these measures over a series of years, most recently in the last year 2 times, to address circumstances arising from a low interest rate environment where and an ability to borrow and consumers' interest in borrowing to buy houses has been very high, and that has pushed up house prices. It's pushed up people's interest in buying houses. So these measures have been taken in general, as I've mentioned, to make sure that when they enter into those arrangements, they're entering into them and are not vulnerable to either a loss of income or interest rate rises over time. In other circumstances, for instance, where the economy was performing well, but risks are lower, interest rates are higher, and the impediments to people making imprudent borrowing decisions are higher, we would perhaps look at circumstances in which we would change some of those rules. These are macro-prudential rules, and they are adjustable.
Thank you both. Mr. Fergus.
Very much, Mr. Chair. Two very quick. First of all, thank you, Madam Petitpas-Taylor and Mr. Stewart and Ms. Leach. I really do appreciate you being here. Two quick questions. The first is that we've heard from stakeholders and from the opposition, my honourable members across the way, about the consultations, and we heard them point to commercial sensitivities and. We heard you point to commercial sensitivities and why we can't have public consultations on specific housing measures. So my first question would be. Is there any feature of the housing measures that differed compared to consultations that occurred in the past, especially under other governments, from, let's say, from the housing crisis in 2008 until now?
Could you clarify, is there any feature?
Well, I mean, in terms of the public consultations that you've had on issues that would affect the housing market, and how do the changes of October 3rd differ in a qualitative way that wouldn't have allowed you to do any pre-consultations with the industry?
Sorry. Yes, by all means. So the changes to eligibility for mortgage insurance have an immediate impact, will have an impact on the marketplace, on the structure of the marketplace, on who gets access to mortgage insurance, and therefore how easily credit can be extended. And so we announce them in a transparent and immediate way to avoid, any gaming of the market, anybody pulling forward house prices and house sales. I would refer you to, for instance, the BC foreign buyers tax, which saw a big surge of house sales in late July, as an example of where, a delayed kind of impact can bring demand forward. It doesn't apply in all circumstances. So there are other places where we are consulting and have consulted. We have made some changes to rules around eligibility for portfolio insurance where we've had regulatory processes which have allowed public comment after the regulations have been published. We've also had informal consultations on a number of fronts, including one that is ongoing right now about the question of whether lender risk sharing would be a good idea. About the question of whether sharing risks with lenders would be a good idea. And they're very open processes with access to documents.
Thank you. The second question, and thank you for that, I do appreciate that, and especially for getting that on the record. The second question which I have has to do with going back to the witness testimony from CMHC, from Mr. Siddall. The efforts or the measures that were taken on October 3rd were measures which seemed to me would be one that would try to mitigate the risk of what Alan Greenspan called back in the 1990s irrational exuberance of the market. Do you feel that that these measures are accomplishing that goal, and what type of data would you need to reassure you that you've met that goal and that other policy tools would or would not be needed?
It's too early to say what the impact of these measures is. I mean, some of them just came into effect at the end of November, so we are monitoring actively those impacts, and we are collecting data from lenders, from mortgage insurers, and we're trying to understand how that's changing.
Just because I have a short period of time, I'm just going to quickly ask you just to elaborate on that front. Some of the witnesses who were here before felt, or they seemed to present, that they had hard data, but your professional opinion is that it's too early to tell.
It is too early to say with any a degree of confidence we know exactly how this is going to play out. There has been a short-term effect, and it is clear that that has, in some circumstances, I mean, as one would expect, fewer first-time home buyers are qualifying for a 5-year rate. As to how this affects the overall demand for mortgages, it remains to be seen. And, you know, we've done it at a period of time where the mortgage market is actually quite slow. So we'll have to see how things play out over the spring.
We'll end that there. Thank you both. Mr. Albas.
Again, thank you to our witnesses. I'm going to start with the Parliamentary Secretary. Obviously, different than question period being in front of a committee. Do you understand your obligations as far as testifying in front of a committee of Parliament?
Absolutely. I worked for the Kodiak RCMP for 24 years and appeared in court as a witness
So then the question would be, because during October 3rd in Kelowna, Mr. Chair was there, many of the committee members were on a telephone conference call with Finance Canada, where officials and the former Parliamentary Secretary did a briefing. Specifically, Mr. McColman asked the question of finance officials, were there consultations? Mr. McColman received an answer from a lady, I'm not sure if it was Ms. Leach or another one of her colleagues, where she said, we wouldn't call it a consultation, however, we did talk to a few banks for their comments. So I would just ask you the question, ma'am, you've given a testimony here today saying that there was no consultation, and to do so would actually jeopardize confidential information, yet finance officials, on the other hand, had told this committee something completely different. So, and I would just also make mention that you may not have been responsible for writing all of your opening statement, but you are responsible for what you say to this committee. Can you say with 100% clarity that there were absolutely no outreach done across the board in consultation to this? And if so, will you commit to this committee to getting the transcripts, audio or the actual written transcripts of that teleconference call and submit it as evidence?
I will submit that there was no formal consultation done.
Okay, well, but again, who's correct? With the official that was on the call, or are you saying that there was no consultation, because that official did say?
I can simply say that there was no formal consultation done.
Okay.
I was not privy to the call.
Will you get the transcripts so we can submit that as evidence?
If I can get access to a transcript, if it is available, I will commit to doing that, yes.
Okay, thank you. Moving on. Now, you're a member of Parliament like the rest of us. Have you, obviously we've had mortgage brokers unhappy for their clients. People have seen 18% less purchasing power when they go to buy a home. You've said so yourself that they're just not able to qualify. Have these measures hurt the housing market in your home riding? What have your constituents said?
Actually, probably my riding is seeing a lot of growth in my municipality, so we are perhaps bucking the trend in my riding per se. However, what I would like to say is that these measures are put in place to protect the borrowers. At the end of the day, it's about protecting Canadian citizens.
So you're saying you're protecting your constituents by doing this?
I am saying that the measures that have been put in place to protect the borrowers, yes.
So, okay, so that's what you're saying to your constituents. Thank you. Now, in regards to profit generated from portfolio insured loans, can you please tell me how much came in the last year from CMHC's insurance?
I can't give you the
it's around $400 million.
Specific number. In terms of profit?
Yes, as in money came in
Are we talking about
for that.
Revenue premiums earned, is
yes,
that what we're saying?
Yes.
These are quite complicated because they recognize premiums on an incremental basis.
But does the government get money from providing this service?
Absolutely.
Okay, so the government would like to portray that taxpayers are at risk when this money comes in every year. Can you tell me where that money goes? Does it go towards a insurance pool or insurance fund to make sure if there is or ever is a cataclysmic event that the government will have that money ready to be able to use? Or does it go into general revenue?
Premiums earned by CMHC are recognized in the annual public accounts of the Government of Canada.
And where does the money go?
The money, for the moment,
is
invested by CMHC and held as an investment. But the recognition from an accounting point of view is of annual income. If an event occurred and the CMHC paid out on insurance or any of the other two
Is there
guaranteed
a fund?
insurers, that would be recognized as a fiscal expense.
Is there a fund or is it an accounting, just a
That's
simple?
your last question.
It's only the
Dan.
accounting that matters.
Mr. Falcon Ouellette, you have time for one question if you want one.
Well, thank you very much. I guess I'll try and make it the most worthwhile one. So we talked a lot about the middle class. I was just wondering what the impact of this change might be on, for instance, a inner city housing market. I know it's a very specific question. I represent kind of the donuts, so it's kind of the inner city of Winnipeg, and I know there's a couple other places like that in the country, which are, perhaps in Saskatoon or Regina. But how does that impact this change on getting, for instance, newcomers and Aboriginal peoples to get into home ownership, even though the housing stock itself might not be of the greatest quality? What do you think might be the impact? I know I'm not looking for a specific answer, perhaps, or I know you might not know the answer, but just some of your thoughts on that.
I think the issue in urban markets is really the changing nature of those marketplaces over time and the need for a more diversified housing stock. This is recognized, I think, in the government's work on its national housing strategy. And indeed supporting people getting access to homes. We have a very large policy set today that supports people getting access to homes, against which we balance these concerns about stability. There are a segment of the population who, in an urban market, particularly where prices have risen, who would be inclined to stretch, and I believe the term we've used is unhinged expectations, just to picked up that term, where they might get themselves into a situation where they were vulnerable. So that was the concern that motivated these policy measures. We think it's a transitional impact. So a borrower or an individual or a household that really would like to own a home can save to own a home over time. It's a question of supply at the end of the day and whether or not there is available homes. And this is one of the main concerns when you look at markets like
So
Toronto.
in downtown, in Winnipeg, for instance, where you can still get a home for about $150,000, and in the suburbs they might be $350,000, $400,000, $500,000, $1 million. Do you think this might push then more of the middle class, younger people, for instance, into that inner city and diversify the people living there? Difficult question, I know.
I can't really answer that. I would say that what it does is in the long run, protecting borrower vulnerability and preventing people from reaching for buying houses and therefore pushing up their prices is in the longer run interests of the diverse population of people who want to buy houses.
Okay.
We'll have
That's
to
it. Thank you very much.
Stop it there because we are at the end of our time frame. I think Ms. Patpaw Taylor, you are going to check, and the clerk will as well, on whether there is a transcript from that conversation and whether it's publicly available would be the other question. With that, thank you all for your presentation, and we will see you all at Wednesday when we talk to the Economic Council. Meeting adjourned.